Hello dear students, welcome you all for the fourth session of Direct Tax 2, Chapter 3, fourth semester, Mangalore University, Bachelor of Commerce. So in this session again we are going to discuss another illustration, simple illustration on depreciation. So my content for this presentation is illustration number 2 on depreciation. So let's directly go to the illustration. So this is taken from Mangalore University 2017 question paper. So from the following, compute the depreciation allowable for the assessment year 2019-20. So they are given the written down value of the assets as on 1/4/2018. So there are two assets here. You can see here one machinery, where then there is a one motor truck. So rate of depreciation also given for both. So machinery's written down value is 8,50,000. Then motor trucks written down value is 3 lakh. That is at the beginning of the year. Then there will be additions, so sales and all. So they are given here purchases. During the year, machinery on, they have given the date also. Date is very important to calculate the depreciation, whether it is a full depreciation or whether it is 50%. So machinery, the depreciation is 19, so rate of percentage is 15% and purchased on 1/9/2018, so 1,30,000. Then machinery, again there was another purchase of machinery on 1/11/2018, so that is for 3 lakh. Then there is no sale of motor truck. Following assets were sold during the year. That is, first one is machinery. They are again given the date. Then truck on 1/3/2019. So date of sale is not so important for us. So let's calculate depreciation. So they have also given SSC is entitled to additional depreciation on the machinery. So only for the machinery there is a eligibility of additional depreciation of 20%. Okay. So let's calculate depreciation as per the income tax law. So this is the format, computation of depreciation. Particulars I have already written here, machinery, then truck. So let us write down the written down value as on 1/4/2018. So written down value of machinery is 8,50,000, then of truck is 3 lakh. Now let's see whether there is any purchases during the year. So add purchases during the year. So there are two assets which were purchased during the year, that is machinery and again machinery only. So they are given the dates. Let's write the amount here in the machinery column. So that is, first asset was purchased for 1,30,000 and second machinery was purchased for 3 lakh. So let's write the amount here, 1,30,000. So there is no purchase of truck. So let's add this amount. So 8,50,000 plus 1,30,000 plus 3 lakh. So it is total 12,80,000. So 12,80,000 is the total of machinery. Then truck, there is no purchase, so it is 3 lakh. Now let's see whether there is any sellings during the year. So less sales during the year. So I think there are two assets which were sold. That is, one is machinery, then there is truck. So 60,000 for machinery, 2,50,000 for truck. So let's write the amount. So 60,000 for truck, machinery, and 2,50,000 is the truck. So let's write the written down value at the end of the year. Written down value as on 31st March 2019. So 12,80,000 minus 60,000, it is 12,20,000. Then 3 lakh minus 2,50,000, it is 50,000. So we got the written down value at the end of the year. So on which depreciation has to be calculated. Let's calculate the depreciation. So let's depreciation. So let's calculate on first machinery. Now let's take the machinery which is used for less than 180 days. So this is purchased on 1/9, so it is more than 180 days. This machinery is purchased on November, so less than 180 days. So which qualifies for only 50% of the rate of depreciation. So that is, so why 50%? Because it was used, total number of days of use is less than 180 days. That's why we are charging only 50% of rate of depreciation. This machinery is used for more than 180 days because it was purchased on 1st September. So it's more than 180 days. So full depreciation is charged. So 22,500 is the depreciation on the machinery which is purchased for 3 lakh. Now remaining, we can provide the full value of the depreciation. So what is the remaining amount of machinery? 12 lakh 20,000 minus 3 lakh. So that is 9 lakh 20,000. So 9 lakh 20,000. So it includes the new machinery also. 9,20,000 into 15%. So what is the value of the depreciation? 9,20,000 into 15%. So it is 1,38,000. Now let us go to the additional depreciation. Now these two machineries will qualify for the additional depreciation because it was purchased on or after 2005. So it will qualify for additional depreciation. Let's provide the additional depreciation. So let's provide for the machinery which was bought first on September, that is 1,30,000 into 20%. So that is total is 26,000. So let's write the amount here. And another machinery is bought for 3 lakh, but remember it is used for less than 180 days. So we have to provide only 50% of the rate of the depreciation even in respect of additional depreciation. So that we have to remember. So total depreciation is 15%. So out of which only 50% we have to take. So total depreciation is 30,000. So let's write the amount here. Sorry, it is not 30,000, it is 22,500. Now let us total the depreciation for machinery. Sorry, there is, this is 20%. So 20%, so it becomes 30,000. So now let us total entire depreciation for machinery. So total depreciation to be deducted from machinery is 2,16,500. Now let's go to the truck. Is there any sales? So there is a sale of truck, that is on 1/3/2019 for 2,50,000. So truck was sold for 2,50,000. So you should remember there is only one motor truck which is worth 3 lakh and which was sold for 2,50,000. So 3 lakh worth truck was sold for 2,50,000 means, so this 50,000 what we have written down value is called as loss from capital gain, loss from the sale of motor trucks on which we cannot provide depreciation, because remember that asset is not there at all. This is sold here. This asset which was there here, truck which is sold here, so that means truck is not there. This 50,000 is what? This is the capital gain, capital loss from the sale of truck. Okay, so no depreciation for truck can be provided since there is no asset at all. So only for machinery depreciation we have to deduct. So let's see what is the written down value which can be carried forward to next year. So written down value as on the next year is for machinery 10,03,000 and for truck is nil. Many students will commit mistake here itself. They will calculate depreciation on 50,000. No, this 50,000 is, remember, it is a capital loss because value is 3 lakh but you have sold it for 2,50,000. So difference is your loss. So on which you cannot provide anything. So that is a capital loss. So no truck here. So no depreciation. So that's all from this video. Thank you for watching this video.